Trideep Bhattacharya, the Chief Investment Officer, Equities at Edelweiss AMC, is with us on the show now. Trideep, ABP is a stock I believe you look at, and is it a part of your portfolio?
Good afternoon. Well, yes, as per the fact sheets, it is one of our portfolio holdings, so I can't get stock specific.
But it's a 7% order inflow growth from India. Is it such a disappointment? The stock has fallen, it's corrected 7%. What have you made of the reaction?
So I think overall, if you look at capital goods as a sector, I think we continue to remain positive on the private sector capex theme. But what one has to calibrate this theme against is that against a very low base which happened last year or year before, last year saw a significant growth. So on that higher base, the growth rates will moderate. But what is interesting to note is that in the context of a global slowdown, the relative pickup in India is still strong. And at the same time, which is not being talked about, and we will see as these companies report, the operating leverage on the back of higher top line, on the back of close to double-digit growth and there or thereabouts, could be kind of something to look out for. But having said all of this, I think it's basically the headline disappointment of the number coming down, which is probably impacting share prices of some of these names locally. I think the market will probably find semblance in a day or two and move on to understand that fundamentals still continue to be fairly robust.
Hi, Trideep. Good afternoon. What about IT? Are you surprised by this sort of a move that you're seeing? I mean, in select funds, you have IT, persistent systems and the likes. They are in the top 2 or 3 holdings as well. So what's your view about mid-cap IT from here on? Are we just seeing a relief rally? Or do you think that it's going to be sustained from here on?
Great question. I would say that overall, if you look at in a fair value market, where are the pockets of value? I think there are 2 pockets of value where valuations are still on the lower side. One is financials. Second is IT services. IT services, maybe in absolute terms, not so much, but relative to its own history, it is certainly lower than what it has been in the last couple of years. Hence, what we saw in this result season is on the back of last result season where we had a shocker from one of the leading companies, the results so far have not been worse than expected. They haven't sort of, shot the lights out, but they haven't kind of, disappointed massively. It's been broadly in the narrow range. I think that's what the relief rally that you were saying that we have seen so far. It is, I think, a sign that things are not getting worse. Are things getting materially better? Probably not in the next 2 or 3 quarters. So in the context of our portfolio positioning then, we were massively underweight about 300 basis points or so about a year or so ago. We are now standing neutral. I think as we speak, that probably is in sync with in tandem with where fundamentals are. So we have benefited from some of the relief rally that have come through. Obviously, in retrospect, we would want to own more, but I think we are just about right at the right place.
Just pull up Polycab, if you will, 8%, almost 9% now. And this is after the reaction on the day of the result, which was, I think, day before yesterday. The results, the 1 day later reaction, which was yesterday. Yesterday was itself, I think, about a 5-6% move. And on top of that, we got a huge move on the stock. I saw price targets in the region of 5,000, 5,100 from a few brokerages. Look at Havells on the other hand, which just reported numbers a couple hours back. That has taken a dip in the last hour or so. It's down 1.5%. And it's a big candle. I mean, I think it did surge to about 1450 kind of levels at the day's high, and then has corrected quite a bit. So, Trideep, did you happen to own any of them? I mean, if you're Polycab, I mean, as they say, you need one name, right? And it's been one of those movers. Go on, sorry.
Yeah, no, absolutely. I think it's a good spot. The difference between Polycab and Havells is that Polycab, again, I can't get stock specific here, but there are stocks which have 2 components. One is the cable and wires, and the other is the consumers part of the spectrum. I think overall, stocks exposed to the consumer part of the spectrum have continued to remain, reflect weak demand, whereas the companies exposed to the cable and wires, which goes into industrial part, that has seen buoyancy in demand. And it's that part of those companies which have reported recently, which has led to share price reaction. We happen to own, it's one of them, which hopefully, which hasn't reported yet, but we'll see how that reports. But that should benefit from the similar cables and wire trends overall. But I think, yes, to answer your question, we have caught on to that trend, not in the form of the names that you mentioned, some other name, but it's an industry name nevertheless.
What about pharmaceutical, right? That's also a pocket where valuations have not run ahead, like the rest of the market, similar to, say, IT, for instance. Is this something which interests you? And if yes, which part of pharma?
Yeah. So I think overall, the difference between pharma and IT is relatively homogeneous as a sector as opposed to pharma, which is a mix of various different businesses, which is basically local business, US business, CDMA, and those drivers are the drivers are different across different businesses overall. CRAMS and whatnot. So the point to elaborate here is that within pharma, we have gone for a more stock-specific approach rather than a sectoral view. And I think the pockets of growth are the API companies who kind of stand to see benefit from falling of prices, and also select stocks where overall the US demand or US pricing is bottoming out, shall we say, or is seeing a bit of a respite. So I think a mix of these two is what we are looking for in the pharma stocks that we own. And as you can figure out, it's more bottom up than a sectoral approach. Overall, we'll probably be neutral or maybe marginally underweight pharma at the moment.
All right, Trideep, final question before we let you go. What about cement? You have a couple of large names in there. You're holding the big boy Ultratech Cement as well, and that's done pretty well. Now, today we'll have Dalmia Bharat. Tomorrow as well, we'll have Ultratech Cement. So in the next few days, we'll be having quite a few cement names that will be reacting. How are you all positioned out there? Sticking to the large cap names, or are some of these mid cap names now giving an opportunity?
Yeah, so I think we own across spectrum, across several strategies that we run based on the mandate. But I think in general, we are overweight cement. We are positive on the fact that infrastructure over the next couple of years would do well as a heat, particularly heading into election year. You could see some benefits which will come through, but we are not banging our back on the current quarter numbers. Let me kind of put out this way. This will probably be one of those years to reflect, or one of those quarters which will reflect sluggish demand overall. I think what incrementally remains to be seen as we get out of this rainy season as to how the prices hold up. And the channel checks there seem to suggest more generally the prices have generally held up better, and the costs have turned out to be kind of lower than anticipated. So that's the running hypothesis, and we hope to see that flow through over the next few quarters, not to get into this quarter results per se.
All right, we'll leave it there, Trideep. Thank you very much for your time. It's always a pleasure having you with us here on CNBC TV18. Thanks indeed. We'll take a very quick commercial break here. As always, we get you a check on what's happening in dealing rooms in our segment, D Street Chatter. Nimesh gets you that Intel, our buy today, sell tomorrow calls with our technical experts lined up. After that, stay tuned.